Hey everybody, it's Steele. I haven't done a video that's been released for months now, since last year really. So I figured I would do a few more before my kids get out of school for the year in the next week or so. In this video, I wanted to talk about what I refer to as reaction lines. And it's not a traditional reaction line as you might think of them. If you look it up online on Google or something like that and find out what a reaction line is, it's not going to be what I'm showing you here. What I'm showing you is just something to use that you may want to use or may not want to use to help anticipate changes in behavior in the market. And of course, what I'm referring to is the market might be moving down like right here. It changes behavior or changes trend and goes sideways there for quite a few days. Then here it gets a nice little blip up and then it moves back down. These are all changes of behavior or changes in trend, changes in volatility. It's all the same thing, whatever you want to call it. And it's what I'm going to show you is not so much a way to forecast the market, but just to anticipate these changes. Another tool to possibly use if it speaks to you, or to ignore if you just don't like it at all for the market. Okay, this is the United States dollar, Canadian dollar cross pair, daily chart. And we're going to be drawing three lines here. We'll start at this low, this most recent big low right here that happened at the beginning of the year back in, looks like January 31st. So the first thing we're going to do is draw a horizontal line at the very beginning of where we're going to measure from, right there. Second thing we're going to do is draw a trend line from the bottom up to this first top right there, just like that. And then the third thing we're going to do is just draw a vertical line right here where the top is. So we've drawn three lines, basically made a triangle out of it, where our starting point, whether this be a top or a bottom, in this case it's a bottom, we're drawing a horizontal line. Then where the trend ended, we're drawing a trend line from the beginning to the end. And then we're drawing a vertical line to mark the time, the point in time, when the trend ends that we're measuring. Now once we've drawn those three lines, all we do is keep the trend line at the same angle and move it over right here like this. Okay? Pretty simple. And then once the market moves down to and touches this moved trend line, we can anticipate the market's behavior will change. And we'll see here basically it was moving down and then it took a more sideways behavior after that. Well, if we go back here to our starting point again and move it to this, move that, we can see this is approximately equals maybe a pip difference high right there. Move it like that and then move this like that. We see that when the market gets back to it right here, it changes behavior. Now, really this right here is not so much what we're going to look at because the market's been moving sideways right here, but when the market stopped, or not stopped, but when the market got to this line right here, the sideways behavior stopped, and then we got the little blip down, and then it comes back up like that. And we'll start here, come all the way up to this big top right here. Then move this like this, and we get the market stopping the move down right there, and it changes to an uptrend right there. Now the reaction line right here, which is what I consider this to be, doesn't tell us if the market's going to change to an uptrend, a downtrend, or a sideways trend. The basic idea is whatever the market's currently doing, it's going to stop and it's going to start doing something else when price gets to this line. We can draw one exact opposite manner. Let's start with this top. So we're going to move our horizontal line right here because this is where we're starting. Then we take our trend line and move it all the way down right there. And then we get our vertical line. Come on, there we go. Right there, so we can know when to move this. And right here, see, we don't actually get a reaction right here. This is a perfect example of a failure. Love to show failures. That's sad, but it's true. I mean, everything fails at some point in time when it comes to trading. If it didn't, nobody would be showing it to you. But what we have here, we actually have a very small blip down right there with this little tail, and then we continue sideways right there. But failures tend to happen right around the halfway or 1/3 point, and we get, looks like probably the halfway point before this tiny top here, before the market moves down there. So it helps you anticipate, even when it fails, it helps you anticipate when the market will be making a genuine change. Now if we look at this again and measure all the way down to this lower low right here, and then move it like this, we see the market moves sideways, and then right here it pops up, and then it moves down to a lower level. So it's going down, instead of being right here, it's coming down all the way to the low right there. And measuring from the top all the way to this low right here, measures out where the actual, remember before with the lines coming up, we saw the change where the market stopped moving sideways and it came down. We saw another change where it stopped coming down and it started moving up. Now we're seeing another change where it stops moving up and it starts coming down like that. And let's move this back here. We get this lowest of the lows from this little, we had to move up this retracement down here, and we've measured this low, this low, this low. Now we're measuring the final low right there. Let's get this back up there. And we scooch this out all the way right here. We see that the market moved down and it came back up here. Right when the market touched this, it went sideways and had a bit of a retracement there. It was just a 1, 2, 3.5 day hiccup right there, so to speak. But the market did change volatility and trend direction. In other words, it changed behavior when it hit this line. So at this point, we've run out of lows to use, so we would start the process all over again. Right here, that's our starting point. We're going to draw our trend line up to, we can start it right here since this is minuscule, but it is a retracement. That's one we can use, put it there. Move the reaction line over here. When the market finally comes back and touches it, right there, it changes behavior. Now, let's see. There's no real, I guess we could use this one right here because that's another little tiny high. After that we get a couple days of sideways movement. I mean, for that matter, we could use these also, but let's just go ahead and start with that one. Did not draw that line properly. Let me move that. There we go. Move that, move this over here, and what we're getting is the end of the sideways move right here, the consolidation phase, and then the market changes behavior again and just starts heading down after that. And if we do this, there we go, draw right there at the top, move this line right here, put it right here. Here we have the market moves down, we have our pause right there, and then the market touches it and then heads back down like that. So as you can see, this can be helpful if this is some of the kind of stuff that you're looking at when you trade. Some people don't pay any attention to geometry of any type, so it wouldn't be helpful to them at all. Right here we can anticipate the market changing. Right here it's kind of an expanding a megaphone type thing, expanding triangle, and the price is touched again. So since we've been in a consolidation phase, now we can expect the market to either continue down strongly, which it looks like it's heading to do or starting to do there, or would most likely start to trend up right there. So that's the basics of this video. Sorry it's taken 10 minutes to get it all out, but I wanted to show you the different variabilities of it and the possibility of failures like we had in this larger sideways market. And if you're going to find failures in it, a lot of the times you're going to find those failures in a big long sideways market like this. But it's just another tool to use in your toolbox, possibly, if you enjoyed it. Anyway, that's all for this video. I will talk to you in the next video.